This is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, daily technical analysis, stock market show where we look at what happened in the market during the day and how we can plan for better trade for the next year. And this is August 3rd, Wednesday, 2022. So what kind of market we have? Let's dive into the charts. For that, we would be doing this analysis based on all these parameters that you see. Right? We have data analysis items on the right side, which also will be looked at. So the charts, right? It's a close with the green but a small body in Nifty and a wide range body bullish green candles that you can see right side on the Nifty that is closed above the previous day's high. Here it is closed above previous day's close, right? So market is not ready to give up, right? Look at the rally, right? It's a beautiful, 13-14% of up move, and here is probably near to 18-19% of up move that has happened. So good rally. The rally is not ready to stop. That's exactly what is happening. So it's a flat day. Otherwise, if you see, because market was very choppy, intraday this is what happened. Right? Finally, it managed a green close on both indices. Look at what happened. At morning, it did a dip, V shape, inverted V shape, another V shape. So it was 1, 2, 3 V shapes and 4 V shapes actually. After 3 o'clock, it did another dip. So very choppy. 4 V-shaped moves are very difficult to handle if you're especially on a derivatives trader. Bank-Nifty was showing more strength and more trending. It did V-shapes, but it was trending up, right? So it also gave up in the last after 3 p.m. Some kind of sell-off happened, but however, it was trending, showing more strength. Another view on investor.com, so you can see that clearly it's an up move that is happening. Good supports and downside, multiple supports. You can see these levels later. Make a note of that if you want to rewind the video and stop it, pause the video and make a note of it. Right? Clearly mark these levels, but you can see that it's very close to a gap resistance on the upside of Nifty. Bank Nifty just cleared the 38,000 rounding number today and is closed above that, and then it has resistance of previous swing highs, multiple at different levels. Right? You can clearly make. Bollinger Bands is showing price expansion. Price is walking on the bands. It's clearly bullish. Bank Nifty also volatility expansion. Price is showing walking on the bands. Support resistance levels, make a note of these levels. Right? There is a resistance there very close, 17,458, very crucial to clear that. So that's on is 17,300 to 17,400, 450, 17,500 to 17,600, then 17,800 to 17,850. Downside, you have supports at 17,200. It's not a resistance, it's a mistake here. 17,200 to 17,300, it's first support. Then you have support at 17,000 rounding number zone. Then you have support at 16,948, and that's the range from 16,800 to 15 after kind of long zones. And then you have 16,700 to 16,750, then you have 16,500 to 1650. A lot of supports. All these yellow markings are all support zones, right? These zones are all support. 16,350, all a lot of plenty supports, and just one more resistance, the final resistance, major one, which is a gap resistance on the Nifty. Bank Nifty, if you see 38,000 is cleared and close above that. Then you have 38,350 to 500, that zone. Then you have previous swing low, which is major resistance 38,759. It has been cleared. It's a previous swing high. If that is also cleared, then Bank Nifty is unstoppable. It will be clearly making the rally, of any closes above that. Then you have 38,900, 39,000 zones, and then previous swing high. Another one at 39,400 zones. Here also there is a mistake. This support zone actually 37,700 and 37,800 would be support zone. Then you have 36,900, 37,500 support zone. Then you have a gap support zone to the 36,800 to 37,000, and then previous swing low 36,800 is the previous swing low. That's also it's a gap support actually 36,800. So good support, a lot of gap supports in Bank Nifty. Also you can clearly see all these yellow marks are gap support. So good support, very good up move has happened. So there is some retracement that can be accepted. Just draw the Fibonacci retracement levels, and then you can understand where it is having a confluence with these gap zones, and that's the zones that you have to be very cautious, right? So make a note of this and then correlate it along with the upper under support and resistance levels, and you can take the trades long or short. Momentum, you can see it's bullish clearly on the short term, right? Bank Nifty and both rising momentum, no divergence seen as of now. Trend indicators are all bullish in the short term. Trend strength is also rising above 30. Bank Nifty is above 40 actually. So as long as there is no bend that is happening, this green ADX trend strength indicator is not bending, then you can further expect more up moves. So bullish trend, bullish momentum. and price action, everything is bullish. Only Japan's bullish. Now coming to volatility, there is some trouble here because market has been moving up steadily since last 3 days, but the VIX has been rising. Normally, when the price is moving up, then VIX is supposed to cool off. That has not happened, so that could be an indication that there could be some retracement that can. So we have to be cautious. But right now, it's in the safe zones. Although it's spiked up 6% up today. Yesterday also there was a spike of another 6%. So that is something to be cautious. But 1853 is still below 20, but very close to 20, so we'll be cautious. So the moment it is above 20, you have reason to be worried. A lot of uncertainties are in the market. Even now there is a China US conflict thing is going on. All the inflation worries, Fed rate hikes, RBI policy that's coming, all these there's uncertainties can be there, you have to be cautious. Implied volatility 17.72 of the Nifty, implied volatility percentile is 55. So which is also a little on the lower side. Just remember it has gone to the 90% kind of levels implied volatility percentiles, right? There can be trading strategy that is based on volatility levels also. That's why these things are mentioned. But overall volatility is below 20, but it is rising up. It is spiked despite the price also moving up in Nifty indexes. So you have to be cautious. Operators analysis showing the levels. Right, there is good put writing that is seen at levels. You can see that in Bank-Nifty also. Bank-Nifty, the call resistance is having 30,000 resistance is dominating, but overall if you see it's bullishness that you can see in both levels of 7,200 to 7,500 is where the highest put and call rating is there. 6,500 to 7,600 the second highest put and call rating is seen. 38,000 is where this triangle put and call rating highest is 338. So 38,000 clearing is very crucial. Whether it will maintain that is close to today above that, but will it maintain that is about the question. That is where the August 4th expiry. 37,500 and 39,000 the second level of highest call rate, second level of highest call rating. Put call ratio is bullish 1.37 and 1.35 above 1 is clearly bullish. But the futures of an interest build-up that is happened is short build-up. Another reason to be little cautious, other than the VIX. There's a short build-up is what the futures II has said, despite all the PCR, despite all the bullishness that you see, price action, everything is bullish, but futures II and VIX is giving some warnings of a small retracement that will happen. And if you can see in the overall in IT stocks did not perform. The major heavyweights of Reliance and ICICI Bank and HDFC did not perform. But what performed was some other things like Bajaj Finance, Kodak Bank, and things like that. So financial services did well. Banking did not do well. IT did not do well. And FMCG and automobile, power stocks, and all of these combinations. So there is across the sector, up move did not happen today, but still market managed to close green. Index heavyweights, if you see it's we'll quickly go through the charts. So two sectors that you would, the stocks that you keep a note is ICICI Bank. Very close to resistance, you have to be cautious when you are going low, but otherwise it's clearly bullish on the momentum and the trend and everything. Reliance is also bullish and now in the back with the bullish sounds and rising up. Now is there. So those stocks seems to be having good momentum, but banks, HDFC Bank is also bullish on the short term. HDFC and HDFC Bank both are bullish, but it has taken a bend today, but it should be fine as long as it is a bullish zone. So momentum is in the bullish zones. IT stocks in the reversal mode. It has got a lot of resistance to further move up, right? So heavyweight, Kodak Bank is zigzagging and it is on the upward zigzag movement now, and it may hit this resistance then come down again. But momentum is bullish. Kodak did a good job. Good movement has happened today. Yeah, so that's what the banks. The ICICI Bank, Reliance in the bull zones, and no HDFC Bank also. ICICI Bank, HDFC Bank, and Reliance are on the bull zones. Even Kodak was also into the bull zones. IT is still the side. IT is actually in the bull zones, but it's in the recovery reversal path. A lot of resistance to that side. Sectoral performance, if we have seen that, some major sectors, financial services, FMCG and automobile did well. So FMCG and auto is leading things. That's what I have to keep a note of. FMCG and auto are bullish on medium term and short term. It's clear bullishness is there. IT and metal is recovering. All sectors are bullish in the short term. But the medium term and short term, only auto and FMCG is. So auto and FMCG confident and long interest can be done. Others they have to catch up. because they're still the sideways on the medium term. Institutional participation, look at this. Yesterday and today, Fyers has been biased. Today, both of them are biased. They are also has biased yesterday. So that is good news that institutional participation is happening good. And dollar has cooled off, and USD INR also has cooled off. So that is a big advantage. It's good in some way that it is some cool off has happened because of rupee had weakened to the lower. So today rupee has gained. Crude oil, US markets, if you see Dow Jones is close green, but I'd watch this tomorrow. So as of now, it's in the recovery path. All the US indices, Nasdaq that you see here, and S&P 500 and Dow Jones that you see here are on the recovery path, but there is a resistance zone that is coming here, 34,000. And similarly, at this marked areas, we have to keep a close watch whether it will hit there, and then again, it's also a channel top. So would it go for another downside move is what you have to closely watch. But otherwise, momentum is caught up. It's in the reversal mode. So if this takes out this resistance, then this markets are in the bull run once again. Until then, you'll have to be keep a close watch of this. Crude oil is cooled off. Very good. Gold is spiking up back to resistance zone from where it had slipped off a few weeks back. So crude is cooling off. Rupee has gained. Indices as of now is looking good. So global course as of now is not bad from the charts, but you have to see that tomorrow morning because there is a US-China conflict that is happening. There is a Fed policy discussion that is happening. It will come out on Friday or tomorrow. Friday, I believe. All this uncertainty is still there. Two actionables. Federal Bank is doing good. It's taking out one of the major resistance zones in the channel up move, and it can go up to the 120 plus levels easily. At least 127 target can be delivered for swing trades. Momentum is bullish. The weekly chart, medium term also it's bullish. Interest made on a daily or the shorter time frames, right? But it has made after the price moves above the previous candle's high. Telecom also is having a breakout. It has taken out a major gaps, a resistance zone, and the green bullish. Only problem is volume is little less. Momentum is just landed in medium term also into the bullish zone. So you have to be carefully tight stop losses, but cap would act as a support now after it has broken also. Tata Motors auto sector as it is bullish. So auto and bank, Federal Bank, both are long. Webp is cautious bullish is what I would say, because all the indicators we have seen, the VIX, PCR, FI, gap support downside, momentum trend, price pattern, support resistance, all indicating bullish. But you have to be cautious because it's a crucial resistance. So the gap, final lap in the race is what I would say. If this is taken out, Bank-Nifty manage to close above this two level, 38,759 and then 17,458, 7,500 zone is cleared, means then we have a bull run. Otherwise, so till then, so there is no guarantee that will happen. No, Nifty may halt here and then move some sideways, may retrace little, or may retrace, or may reverse entirely and make another swing. All these possibilities are there because uncertainties there. RBI inflation, US war, China Russia war, all these uncertainties. The crude has cooled off, yes, strengthened, but not to where it was in the last year time frame. So it's still at a very weak level. So you have to be cautious. FS, this is mistake that is written here. FS has turned it to be small bias, which is very positive. And we have seen that dramatic recovery on 2-3 weeks of 15% kind of recovery. Bank-Nifty nearly 18-19% of recovery in 2 or 3 weeks is a strength in the confidence of retail market. So right, so volatility is still there. You have to be cautious. Cautious bullishness is my view. Always go for hedge positions and never have naked positions, especially in the derivatives, right? And hedge your positions with different option strategies, that videos of which can be found in the same playlist, right? So I hope it has helped you to frame your market view for the next week. If you helped it some way, consider hitting the like button, share to maximum. Thanks for watching. Happy trading and happy learning. Bye.